Now let's go across to a management conversation. Improved GRMs and compensation for LPG losses aid HPCL's Q3, but with geopolitics around oil supplies, etc., it becomes difficult to kind of predict this. Let's get in Vikash Kaushal, Chairman and Managing Director of HPCL, on board to discuss this further. Mr. Kaushal, great having you as always. Thanks so much for taking the time out. And before we talk about the quarters, Mr. Kaushal, I would love to understand from you. This is the first time that we are talking. I'm Neeraj Shah, by the way. I'd love to understand from you that at the start of 2026, with all the uncertainty prevailing or heightened uncertainty, I'm saying the world will always be uncertain, but there is heightened uncertainty right now. How do you make a business plan for what will happen over the next 12 months? And how do you communicate it to us when we ask you that how do you anticipate the next 12 months to be?
Good. Good morning, Neeraj. Good morning to you and your viewers. Pleasure talking to you. You start off with a very interesting question. How do you plan in this world? Before taking on this role at HPCL, I was a management consultant where for a long period of time I did strategies and planning for this and tried guessing these kind of situations for my clients, and now I'm finding myself in the middle of one of those situations. Well, when you run a business, there are controllables and there are uncontrollables. If I start planning for all uncontrollables, then I'm going to lose the plot on the controllables. So I actually focus a lot on the controllables. Me and my team here, we are working on what we can control, what we can get better at, and what we can improve in our systems so that we can manage the volatility better. One of the lessons I learned in my long career in management consulting is businesses thrive when they lower their break-evens or lower their operating ratios. And that's the mantra in the last 1 year we have been taken in HPCL. We'll talk of our results also, but if you see the results behind the positive and negative volatility of the external factors, there is a lot of hard work around getting our costs right, getting our operational efficiencies right. We have captured some of that, but there is a long way to go on that, and that enthuses me that, if I tighten my belt and I run an efficient system, I can manage that volatility. Then if I just break the volatility down into what are 3 or 4 most volatile components, crude obviously is the most volatile. We manage that crude by diversifying our sourcing, sharpening our, I would say, processes in which we buy, even optimizing our things better so that I extract every last ounce of value from the crude which I'm buying. So that's something I can do on the crude side. There is, of course, we are exposed to forex things. The dollar went up, the prices, there was a movement yesterday. It impacts us. We take reasonable bets on hedging and our loans, etc. We manage those portfolios actively and as much as we can manage on that entire thing. But the basic mantra is actually get your business in a leaner, meaner, fitter, that can help you tide over crisis. There will be bad quarters. We have had a string of good quarters. I'm sure there will be some which will not be so good, but if you are lean, mean and fit, you bounce back very quickly.
Well, Mr. Kaushal, in some sense, your appointment was a landmark move, right? In case of an oil marketing giant, which is so public entrenched, being at the helm, having a private person. I'm just trying to understand, is it that when one looks at the history of, because you focus so much on costs, right, and belt tightening, when one looks at the history of an HPCL or any other OMC, but HPCL is the case in point, rarely have operational metrics or margins across that 6-7% mark, right? That's typically tended to be the best. Sometimes it goes into negative as well. I'm just trying to understand, do you foresee a potential wherein the numbers could structurally be higher because of the efforts that you are taking and possibly because of lower relative volatility in crude oil prices versus what has happened for a better part of the last decade?
Yeah, see, every business is structured differently. If you look at, say, a renewable business, solar farms, etc., they run on late 80s as EBITDA margins. Oil marketing companies like ours, oil refining and marketing, run on relatively lower EBITDAs, but huge bases. My annual turnover is 4,50,000-60,000 crores. So the base is huge. Hence, the ratio alone cannot be compared across sector. And I don't want to fall into the traps of ratios across sectors there. Now, to your question, can we improve further? Of course, we can improve further. And I don't want to give you a wrong notion that it's only a focus on the cost. We do a lot of stuff on the marketing side. You go out and see some of the retail outlets in the city. If you're doing it from Bombay, I can name 4 or 5 outlets. If you're just upgraded, go and see them and you'll see the amount of marketing effort which is going around that. So, in sustaining a business, you look at every block and say, how can I do better on the market? How can I improve my supply chain cost? We are a huge supply chain and logistics company, 50 million tons of product moving from one place to another, crude moving, so many ships coming in. We are a big logistics companies in some ways. How can I run that more efficiently? And then, of course, how can I run my refining more efficiently? There's a lot of improvement, and I'm very happy that HPCL is on that track. And I would say, actually, the Indian refining sector is on that track. I see a lot of, when I compare margins with other companies, lot of efforts are being done by different companies to move into an era where we sharpen our cost structures, sharpen our operating costs, etc., to increase, I would say, resilience of our businesses. Because volatility is a given thing in a commodity-led business. It will always happen.
Mr. Kaushal, good morning. Alex here, and thanks so much for that color. It's a unique opportunity to speak to you. But we must talk about the quarter gone by and speak about the GRMs as well. The expectation was, reading the Singapore GRMs, that it would improve, but it's flattish at around 8.8 to 8.9. Are there factors that played into this that were unforeseen, or do you anticipate that GRMs will head north in the fourth quarter?
Yeah, morning, Alex, and a pleasure speaking to you. We did have I would say, a dampening effect on this. I'm not fully satisfied with my quarter. It should have been a bit higher, and that was, we were public with it. We informed the stock markets. We had an incident in Mumbai refinery where we ran a parcel which sort of caused a bit of issues in our refinery around contamination, which led to partial shutdown and some contamination on the product, which we had to take back and sort of clean up and all. That has dampened our GRMs for the quarter, definitely. So if I look at PAN HPCL, we should have performed with this kind of numbers, probably at a GRM of $1 or shade dollar in some sense more than that. So that would have been the normal. But I'm very happy that despite having and when you run large assets, there will always be times when there is a challenge on an asset, some unit goes down, some complexity comes in. I'm very happy that despite having that issue, we came in with a reasonably strong quarter. But if you ask me the question, was that the normal performance? No, it should have been a dollar in some sense higher than what it came out.
Thank you for that candid response, Mr. Kaushal. Good morning, Hiral, on this side. You're talking about the gross refining margins. Let's talk about the marketing margins as well, because the lower crude sourcing cost is what you're seeing. And this is even after accounting for the weaker rupee. Marketing margins continue to remain strong in consonance to this. Are there any plans of going back, say, to the daily fuel price change kind of a regime, number one? And, when we're talking to a couple of analysts as well, the integrated gross marketing margins that have been earned by OMCs is around, 8 rupees per litre at the current crude price. Is that also very high?
Yeah, see, first of all, I really don't look at GRMs or marketing margins separately. For me, that is left pocket, right pocket. I'll be very honest around it. I look at what price is crude coming at and what price is fuel getting sold at, and what is the integrated margin. And analysts have Excel sheets to run. We have a business to run where we have volumes of product to be transported and rakes to be shipped and all those kind of things. So we really don't worry about what calculations come on Excel sheet on a daily basis there. Of course, in quarterly calls, you have to answer those questions. The way I look at it is the crude price has been benign, I would say. There have been a lot of challenges in the market. We all know the geopolitical situation. But by and large, crude has been stable. If you look at mid-60s to low 60s, for a good part of the last 6 to 9 months, it has been hovering around 62, 63. I think today, 62, 63. In that region, it is around. So that's a good sign for downstream companies like us. It also is a reasonable sign for producers who supposedly are getting good money at that, or many of them are getting. That's why the price is at that level. So once the crude is at that price, then I worry about, or what I focus on is, my team focuses on is, how do I get that sourcing more efficiently done? How do I get that conversion more efficiently done? On the prices side, we are in a price regime where we all know the price regime. I'm not going to delve too much into that topic. Once the refining is done, then my focus and our focus is on how do I efficiently get it there, how do I keep my pumps running all the time, how do I attract more customers, etc. If I get that portion right, then I will capture the value around this. In our business, it's very difficult to forecast any kind of prices or margins. So we work on scenarios, and we work on how do we cope in different kind of scenarios. If I could guess GRMs, or if I could guess oil prices, then I guess I could sit and be on the beach all the time and earn a living out of guessing that. But it's not feasible. We don't know how the prices would move. All we can do is how do we prepare for different scenarios, and in our planning we take that into account.
Yeah, I mean, so too with the markets, right? If we knew what the prices would be, then we wouldn't need to be here. The point is well made. Mr. Kaushal, just want to understand on the debt levels as well. So they've been steadily coming down. 63,300 crore rupees March 2025. It's come down to what, 48,700 crore rupees. What is the kind of glide path that you anticipate? Is there a target here for FY26 and heading into FY27?
Yes, definitely. Our debt leverage was high. We have done a very large capex program, and maybe I like to talk about that because that's a pivotal moment for HPCL. The next few months are pivotal, and not only for HPCL, for the Indian refining sector. I like to answer, maybe talk a bit about that. But before that, let me answer your question. Given that we were at a fag end of a capex cycle, and just to give you some ballpark numbers, probably HPCL invested about $15 billion or thereabouts through its own balance sheets and joint ventures over the last 5 or 6 years. These are approximate numbers, not to quote exact numbers from the P&L. I don't remember them offhand. But that's a huge thing, and obviously that has impacted the debt levels. You're right on the debt numbers. At the beginning of the year, in the first analyst call, we had given a glide path and a guidance of about 1.15 or there-ish, 1.2. I would say we were tad conservative because we didn't want to go wrong on that. Since then, we've also got the LPG compensation for the under recovery for last year, so that has also helped. I'm very happy to report that based on our efforts on reducing the capex, managing our costs, strong operational performance by HPCL, we have been able to get the debt equity sub 0.9. I won't give that as a guidance because typically in the year it is lower, end of the year it is always a bit higher, so this will also go up. But we would expect to be well within our guidance which we had given to the stock market of 1.15. So I would say roughly around 1 or 1 point some number is where we will end this year at. It was a very concerted effort the management team of HPCL took to deleverage the company, and I'm happy that we are on that path. It is starting to show us results. If you analyze our quarterly numbers and compare with quarterly numbers of last year, you will see a significant drop in the interest burden. And if you compare the 9 months, if I remember the numbers offhand, the 9 month is something like 400 or something of that sort, the interest drop. And the last quarter itself is something like 250 or 240, somewhere in that region. So that interest, because we are deleveraging, the lower interest is coming in regularly in our P&L. You will see the acceleration on that in the coming months, and that adds to our bottom line. So I'm quite pleased where we are at this point of time, and we would continue the deleverage path for some more time.
Mr. Kaushal, just on the previous question that I asked with regard to the GRMs, my analyst has done the calculation on his end, and we're just trying to get the numbers right. You're saying that if there wasn't this contamination, it would have been $1 higher on the GRMs, right? So if you were to put a number to the impact of the contamination, would it have been approximately 500 crore?
See, I wouldn't want to call out a number right now because, as you can imagine, because of that issue, there is a dispute between different parties. So I don't want to call out a number in a public domain, but you can calculate it. You have smart analysts is what I would say, but I wouldn't want to give out a number here.
Okay, so we will do the calculation and then figure it out, Mr. Kaushal. Okay, the other thing I want to ask you is the chances are high when you talk of the fiscal slippage. A lot of experts are believing that probably the government will look at increasing the excise duty when it comes to petrol and diesel to cover up for the same. Do you see that as a possibility, number one? And if the government increases the excise duty, will OMCs be able to pass it on, given that crude prices are already high?
See, I worry about what is in my realm and what is in my controllable factor. I'm not the authority which decides on excise duties. That's a prerogative of Government of India. So I will leave it to Government of India to answer that question rather than me. What can I do about it? I said earlier that we look at a lot of volatility scenarios in our business, and we prepare for all kind of scenarios. How do we prepare? We prepare by increasing our operational efficiencies, improving our resilience, strengthening our assets, getting lower on the cost basis, etc. So that's what we have been focused on. So I worry about or focus, worry is the wrong word, but I focus on what's controllable for me. And those are the factors which we are looking at it. And I'm very happy to say that if you see the financial results of HPCL over the last 5 quarters, every quarter we have been giving roughly between 3,000 was the lowest in that period to 4,500, in that range. If you just average last 15 months, we would have given close to 1,250, 1,300 crores of PAT per month. That means progressively we have built in resilience in our business. Earlier this year, we ran a program called Samriddhi. We are still running it, by the way. We gave a guidance to the market that we'll chop off 1,000 crores from our cost base. And we are very happy to report that it is above 1,000 that we have achieved in 3 quarters. Now we are going to start the next wave and say what else can we improve on it. So that's what I worry about. Extraneous factor, crude, tomorrow if crude price is high, I still have to work around that entire thing. So we'll deal with it when it comes to that. But right now, me and my team are more focused on what we can deliver in our businesses. We are very focused, and I'd like to, if you have a question on this, or maybe I can talk about our projects, but that's an exciting time for HPCL, and we are very focused on getting those projects on stream.
Fair point. And what about Russian crude? What's your stance? I mean, is the crude that's being sourced from Russia now absolutely zero? Where does it stay? And any plans of restarting if it is zero, or any plans of increasing, given the discounts have again inched up to what, $6 per barrel?
Yeah, I would again put that same question in the bracket what I was talking earlier. Yes, the Russian crude numbers have come down. All of us can read the data. When we source the crudes, we source it in the last quarter. If I look at how we've been sourcing what's best for us at different points of time. The spot, of course, there is a term crudes which come on a regular basis. The spots we have been looking at what's best for us at any point of time. And we took our own calls on that. There are entities which are sanctioned, we don't look at it. The entities which are not sanctioned, we periodically look at it and see what kind of cargoes we can pick up from there. There are cargoes from that being bought sporadically whenever it fits in. Because you also have to be careful on the paperwork. It's not only us there is also bankers involved, so everybody looks at being very dealing with only a non-sanctioned entity. So it's a complex subject, difficult to give an answer offhand what will happen. But Russian crude is available, as you have rightly said, but one has to be very careful on not getting into a sanctioned entity.
Mr. Kaushal, I must appreciate it, and on behalf of my colleagues as well, the time that you've spent with us. It's more than budgeted, and we appreciate the time that you've taken to speak to us and our viewers this morning. Wish you all the best.
But Alex, I dare say, it is good to get such time with Mr. Kaushal, simply because we are, it's a change. We're not seeing private enterprise take helm of public sector enterprises and then move them to the next trajectory. So,
100%.
in fact, I hope we can do this every time.
We look forward to it, Mr. Kaushal. Wish you all the best for the rest of the financial year, and indeed in 2026 as well. All right. Well,
thank you, and wish you and your viewers all the best. Thank you.
Thank you, sir.